FXBros.
What's up? What's up? Welcome, y'all. We back. We are back with the lives. Sorry if you missed it. We were pretty much very, very, very busy. That's all I'm gonna keep. I'm gonna keep it at that. I got two other businesses that I do on the side, a recording studio, and me and my wife we do estate sales. And last week was like crazy hectic with both situations. So I just took it upon myself to not stress too much because it did throw me off on my schedule with getting up normally to catch these markets. So I kind of took a break on a personal level, so that extended into not going live in the morning. So we didn't review anything from last week, but that's okay because we now have history to look at, more added history that we can look in the past week's price action and see what type of moves can we look forward to going forward as we come to a close of this month and about to start August, which is crazy to say, August 2023. So we're approaching the later half of the year, and we already know what that part of the year consists of, just back-to-back holidays, eventful days that's going to push the economy. Get out. So we just got to keep that in mind. But nonetheless, we're gonna review last week and see what it all did, what overall happened from the high time frame. So let's dive right in, man. Let me see. We go a little further. Let's see. Take a look, quick picture for Facebook right quick. Just to let these niggas know we here. We back, y'all. We live on YouTube. Good. That camera. We've been gone for a whole week, y'all, but we back on our lives. About to break down all last week this Sunday, and be back for it in the morning. Y'all tap in. Alrighty, let's get into it. Got that posted. So, like I said, we were pretty much out of commission all week, even from last Sunday. So I'm gonna start from last Sunday, which was here on the 23rd, on this Friday. So let me get a vertical line. Bam. There we go. So this line represents Sunday. So off rip, we realized starting Sunday, going into Monday, this was the low of the week. That low did not get broken through and retested until Thursday evening. Thursday mid-evening to late evening, we had a break and retest scenario. So the initial high that was settled at about on Tuesday, and the reason why I call this high, this is a significant high because this high also led us to testing these old lows and ultimately breaking structure here. You know, we had strong structure developed as we got into this high point, and that's from that high point, that's when we broke this first level of structure. So that was the most respected high. We didn't break this high, nor did we break the low of the week until Wednesday midnight. Thursday midnight. So Wednesday late night going into Thursday early morning for London. That's when we broke those highs and closed above pretty much at 11 o'clock. So that would have been 10 o'clock Central Time. Nonetheless, that high was broken with this one candle here. And then that high was broken for the last swing of liquidity. And from that point on, we've been selling off. Created one of our first major gaps on the 1 hour. We had this one up here, but that one still didn't break structure. So ultimately, I would call this out because it matches with this 4 hour gap that we had from 7. So anything within this range, but 2 time frames match up. That's a significant zone. So that's all we need to focus on right now. But the market from last week started off in a consolidated scenario, especially if we look at it from Friday's low going into Sunday's extension to sweep that low. Sunday at 9 o'clock. So we drew this level out. We had a fake out to the upside, respecting the low, also giving us a bullish engulfing. So that was your scenario right there for buys. Didn't have a gap to fill in like that until we got to this area, which it was multiple situations where you could have got into that, which should have been here, here, and here. You know, as you look for areas to buy into this gap. So that was a good area to look for buys. After you notice this full bullish breakout, like I said, we had a few fake outs that traded back into this gap that would have been here coming from Friday into Sunday. Yeah, I mean, based on the wicks, they are touching, but obviously, it's still a lot of price action in this area. The fact that this wick only wicked up and wicked down right here, kind of more into, I guess, if you want to look at 50% level from this strong bullish rejection, because that's the candles we want to look for when we're looking for true direction in the market, is large bodied candles with volume. So we see this, if we can take out our Fibonacci, and mark the swing low to swing high for this 1 hour candle, we would see that below the 50% level, which would be right here, would be the best area to catch buys. So anything below here would be considered a discount. And you want to buy discounted areas for a higher selling price. That's how we catch profit. And we want to sell from a premium. You know, you don't want to be selling stuff that's on sale. You want to sell it when it was at its all-time high. That's how you get more profit. If I could sell something for $5, I only paid $1 for, versus me selling something for $1.50 that I only paid $1 for. That's a big difference in profit. So we like to sell it at the highest we can, called a premium. So nonetheless, considering this was the first one candled 1 hour big volume push candle. I mean, we had some volume here, but nothing like this. And we had to wait all the way until Monday at 10 o'clock to see true volume on from the 1 hour aspect. Of course, we probably saw volume on a smaller time frame, showing around key session times, like crossover times and all that. But nonetheless, 50% of this candle, which would be everything under this line, would be a good premium area to buy. So you could catch buys here, catch buys here, and catch buys here. Everything under that 50% level. So as you can see, all these areas were good situation to catch buys. And looking back in the past, this was nice structure going bullish because of the big body candles. And like I said, we got this one during that in London, heading to New York lunch, which is really the close of New York because volume dies after lunch around 1 o'clock, 2 o'clock, 3 o'clock. All that volume dies down. Even though it is still the New York market, is dead volume around that time. So we're not really looking for entries, and that's why you get these weak candles around that time. And then we get an increase in volume later on in the Australian and Asian session, which is around 8, 9 o'clock going into 1 o'clock in the morning. And that's what you see here. More volume, more volume, more volume. A lot more volume. The only time we got bearish volume was on this Tuesday at night. But something's telling me this was news the way that we did extend all the way down well into the discount kind of level of this first initial sign of the week that we had bullish momentum. But it didn't close with, strong momentum to the downside. Yes, it was a large move. Yes, it still had a large body, but its potential wasn't had because it left a long wick. So if this body would have closed down here, it would have been probably a little bit stronger scenario that the bears would have continued on Tuesday, which would have left all this true, swept this liquidity, tapped into this gap from Thursday of the previous week, and then that's all the information we need to sell off. That's basically what we were doing. We were swinging back high to close in this gap, and then we're going to continue for sale. So that was the suggested scenario, but all we had was one thing that didn't happen was these lows being broken through and closed below. So regardless, we had all this. It did not break this low. And even though we had a wick to fill and in volume during the London and New York crossover, we did fill this wick, but we did not break below it or close below this wick. So the bulls were still showing that they had the overall control and power in the market, regardless of all this selling off and different structural changes here. We have a structural change with the break below this candle, but notice how it didn't continue after it broke below. After we get this long candle to break below this swing point, we get a very quick rejection candle tapping into this new gap that was created and then selling off again. But of course, these key areas that everybody's being taught, these fair market gaps, if you will, that's what they call them, that could be entered into the algorithm to even if we do or do not attack the swing low after we filled in this gap, we know that there's a lot of liquidity and stop losses because it could be a lot of key people trading these scenarios with these order blocks and fair value gaps. So with that being said, have a high expectation. And I'm saying this for Australian dollar. I'm pretty sure it's probably on all pairs, but I'm saying this on Australian dollar. The absolute best and blatantly obvious move that could happen, whether it's a bearish or bullish engulfing after we fill in a gap, that's an obvious move that's going to happen in your favor. Expect that scenario to get that swing, that old swing that happened. Expect that to get broken through or ran through for liquidity. Expect that recent swing for that entry, that sweet golden entry, to be ran. I've been saying that so many times. So for instance, this candle here wasn't an engulfing, a bearish engulfing, but still we did fill in this gap. But nonetheless, after the bearish move that filled the wick of this strongly wicked candle, after we filled that wick, market swung back up and took out this liquidity before it started to head back bearish. enticing more traders to get into sales because, hey, we're going to swing this, we're going to take out liquidity, and there's another gap that we can reach into. So that's even more scenario for us to sell into. But yeah, if you would have held in that, you obviously would have woke up to a loss because not only did it swing this high again, but it ultimately swung the high of the week. So that's just letting you know that probably whatever news event came out on Wednesday late night, I guess you could say Thursday morning, but it would have to be like a London type scenario. Possibly that happened, but whatever caused this bullish run, that was all the scenario we needed to swing the ultimate high of the week, because so far going into Wednesday, I would say somewhat mid to late evening Wednesday, this was still considered a high of the week, that Tuesday 6-7 p.m. Swing point. And there was no signs, especially after we already swung this high right here and filling in the gap. There was no true sign that we were going to continue going any higher, creating a high. The only sign that we did get, of course, was the fact that none of the lower swing points, as we were creating this bullish structure into the market from Sunday, Monday, all the way going into Wednesday, none of these low points got closed below. So you got to go with structure. Yeah, it's going to be a lot of liquidity runs, stop loss runs, old swing point runs. But when you have strong structure, like we know a structure, highs getting taken out because we don't have any lows getting taken out over here. So we know this is bullish structure. So we can expect highs to keep getting ran. That's one thing we can expect. But after the ultimate high is ran, expect the ultimate low to be ran. And that's what we saw play out in this scenario from Wednesday early morning before New York. London, we ran the high of the week on from Tuesday evening. On that Thursday early morning on London, we ran those highs and could not create any more bullish structure that would take us furthermore into old highs, which we still have a target of this target from the 1 hour, but ultimately this is the target I was looking at. 4-hour gap from February, still haven't tapped into yet since February. So that would be the scenario we would be looking for. If this was swinging high and the bulls were still in play, we should see a continuation. Maybe after this gap would have been filled here. Even though I didn't write it out, I didn't draw it out, but it's still a gap area. This area right here, all these different gaps from here to here that we have from here to here, these little extension in price, leaving gaps right here. It's a lot of scenarios where you don't see it, especially where it's not a lot of volume. Typically, we get these fair value gaps when you get a large increase in volume out of nowhere, whether it be news releases or session crossover. So nonetheless, this would be a scenario where we expect market to reverse from. And it started to right here with this wick, but this was where we will want the bulls to come in and to create bullish structure going higher. That never happened. Actually, this scenario that created this wick to bounce off this first gap continued bearish to swing out this initial low to now call this market a bearish market, especially after we broke below this major swing point, structure point. This is all structure. Lower high, 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 lower high, 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 lower high, 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 lower high, 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 lower high, low, lower high, 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 lower high. So we had the structure there for bulls. If we would have continued with this, it would have been another swing point right here, especially not taking out this low. And even if we did take out this low, we wouldn't have taken out this low, which, as you can see, is the main structure point. And yes, we did bounce and reject after we did swing their points, which lets us know that that was the true strong structure swing point that needed to be broken to change the market bias from bullish to bearish. And as you can see, we continue going bearish into Thursday, holding off on Friday around the London Open, going into New York, and we pretty much been kind of settled around that price, anywhere from 66.40 to 66.80. So that little 40 pip range we can kind of been hovering around since Friday at midnight. So all of Friday kind of been just a resting period, if you will, from this bullish transition that we had from bulls to bears. Now, as far as the 4-hour gaps, I do have it on the 1 hour time frame, but I do have a 4-hour gap up here. So I would like to see the market trade into this area, which is 67.60, 67.70, 67.50-ish area. Create a scenario for us to sell, which would be like a nice engulfing on the 4-hour, 1 hour, and then drop down to the 5-minute and find a bearish engulfing to trade into that during key session times. So I would want to look for the London New York crossover, the London close, and then the Asian session. I would say the open of the Asian session, but more so around the Asian session in general. We'll look for the scenario to happen. Yeah, this old 1 hour gap that's pretty much full. Going from 728 that we did tap into on Friday at close. And from that point, we've been on a little bullish run. Starting to get a little rejection right now. Still didn't take out any old highs from Friday. And this would be the old high right there. So still got time for the market create something interesting. Price levels for the bears, if we do continue bears, we still have a 4-hour gap from the 1st of June that we haven't tapped into for a while. So we still have targets down here. And we would need to see a scenario, at least us break through a clean breakthrough of this 1 hour gap, also breaking this low. And then we could target this low and ultimately going down into this old gap from June 1st. Let's see what this looks like on a higher time frame, because that June 1st is basically that swing point from that bullish run in June. So I could see that. I could definitely see us creating a market to turn around bullish from here, and even extension into swinging this low for more liquidity. Still got a daily gap from November of 2022. So we got a lot of bearish targets. And we have some bullish targets as well. So we lit. I'll be right back, guys. Fill up on the grapes. All right. We'll take a quick glance at the daily. One thing I do know from, let me see, this was previous week. The week of July 12th, which is like mid-month of July, we did create a double top scenario. So I know that's liquidity. Same way with this double top scenario. No real strong prominent gaps besides up here that we could fill in on the daily. I'm gonna say it would be nice to try to catch an entry on this daily with this candle turning bearish going into London tonight. So we catch a scenario on the 1 hour or anything, any time frame around there that would catch us into a selling position. That would be good because we can target this week's low, potentially this low, and then we got this 4 hour gap that we can target. So let's see, that's pretty much the scenario on a daily time frame. Let's look at the weekly, see if we see anything that stands out. I like to look at multiple time frames so we can make sure we're not slipping up. Let's see. Let's see what's happening. What's up? What's up, brother?
What's up, brother?
Ain't nothing, man. We back.
Back in this thing.
Back in this thing. Just going over previous week, what the market basically did. Yeah. As long as we don't swing any of these lows on a weekly, we still should be good for bears. For bulls. Playing off of the November gap from 2022 that we pretty much filled in around May's low in this June run that we had. After we swept these highs of February, March, and April, came down to fill in this last week gap on the weekly. And that also just created more bullish structure in these lows. These lows have not been attacked. They have not been broken through. So that's a good thing to notice on the weekly, like to see if we do actually break into these low, strong weekly areas of interest that we have. We got a little double bottom down here. So that would be a good telltale sign to see how a market will shift, if we will get a bearish market, if we are attacking any of these lows from May and June 1st, or the end of May going into June 1st. So that'll be a good feat for bears. And looking at the daily, that's basically the same structure I'm seeing from May. So it would be nice if everything will follow along and we get a bullish engulfing on the daily. Might not get it on this candle, but that would be nice to get a scenario in that form. If not, we definitely probably going to be heading lower. But I like the fact that we do have liquidity up here. I like the fact that we can go bullish, sweep these highs, and then go lower. Nonetheless, every scenario is a potential. We just want to be aware of all the scenarios instead of being blindsided, looking at all the time frames. While I'm at it, let me take a quick glance at the monthly since we are ending this month. So,
hey, bro, is your charts up on the screen? I don't see it.
My charts are up on the screen.
Okay, yeah, I don't know why I don't see it on my
What do you see? Like, you see the background, just
yeah,
not the chart?
I just see Sydney.
Wow. Yeah, let me see. Let me see if I show this. That's the news. You see that?
No, I don't So yeah, that must just be on my end.
Yeah, because it's showing on YouTube. It's showing on Melon. Yeah, it's showing the charts.
All right, it's all good. I just I follow along. I'm gonna pull it up separately on my laptop, see if that works better.
Okay. Let's see. Hold on, right quick.
All right.
All right, we back. One thing that stands out to me, this is our second monthly bullish engulfing that we're coming from. If we look at the monthly, we had a bullish engulfing November 2022, and then we just had another one June 2023 with a nice little wick to fill. Granted, I really don't think we're gonna fill that wick on this month. We only have 18 hours left for this month to candle to close, so that would be very shocking that we'll get volume going into the market. What's up, buddy? You back?
Yeah, I'm back in this thing.
Yeah, so that's one thing to note. Even though those two bullish scenarios are still fighting and have yet to beat the bearish engulfings that have been had for the monthly, going back from June 2021. So we had a bearish engulfing on the monthly in June 21. We had one in April 22. Then we had one February 23. I'm gonna say, that's a hard situation. Let me look at the weekly again. Yeah, it'd be nice for the weekly to have a nice bullish engulfing, but like I said, this monthly is about to end in a few hours, so I'm probably leaning more towards the bulls, especially with this monthly potentially closing like this. Going along with this monthly, we still got wicks to fill and volume to go higher, so I'm kind of going along with the bullish scenario. Granted, yes, I do believe we could potentially go lower to swing the old low from this monthly to grab that liquidity, and I'm pretty sure it's lows on the weekly too. So we put up the weekly.
Yeah, especially just showing the that's like a big rejection candle
Yes,
that is forming too on the monthly.
yes, and the body will be very weak to go along with that big rejection. So far, as it stands, so far. So a lot of indecision on that month. Still a strong bullish push. Did not sweep the previous month's high, but it did pretty much match it, leaving some strong liquidity up there, a lot of respect up there. But at this point, being that the market trended up that high, if we're not gonna trade up any higher and swing any more higher points, then the next scenario is for us to come down and swing the low point of 64.50. in that area, and that's on a
Yeah,
month.
it should be a lot of volume going into August. Just the way that this month ended,
Right.
so that could have been that push from this month was like the kick of which was CPI was like the kick of everything to start
The
this
direction of the month.
volatile, yeah, or just to add some more volume.
Right. The CPI was last week, huh?
Yeah.
Okay. Hmm. So yeah. Yeah. Let's see what the weekly looking like that. The daily looking like that. The double high scenario right here. I would really like to see the daily test this 64.50 area, 64.60. Swing all this little built up structure on the daily. Oh, it's locked. All right. Yeah, I like the bearish scenario to go higher if we are going to bullish. I like this. Whatever last week did, this bearish scenario, I like for that to continue. Hopefully, closing this 4-hour gap once and for all from June, and maybe swing June's low before we go higher. Maybe not a close below, but a nice little swing. That would be nice. But like we all know, only time will tell.
That's it, man.
Only
Man,
time will tell. But we do have to have dialogue and discussion about all the different scenarios, and just like how we broke it down all the way from the monthly. You gotta have talks about all these different time frames to see what is supposed to happen and what is not supposed to happen. If that makes any sense. We shouldn't see a large body on July's monthly candle. And the reason why I'm saying that is because we only have 18 more hours. Now, granted, 18 hours is a lot, but judging off of what it did all month, it'll be very weird. And also, piece of ammo we could use that the market just went on a bullish run for the remainder of this day going to next day's close, resulting in a strong bullish monthly candle filling in the previous monthly's wick. On the 4-hour, this scenario would basically work out to about here. So Tuesday, August 1st at 1700 hours, that's when the next daily candle opens. And basically for our month, this was the high of the week for the month of July. So what we're expecting is for this to rip bullish and take out these two swing points and close somewhere near up in this gap to give us more closer to that bullish wick fill on the monthly that we saw. Right now, as it stands, we got a weak ass candle on the monthly for July. Big bullish wick, but weak body. So in a smaller time frame, we'll have to see a nice bullish run from here going into the daily close of tomorrow. And like I said again, only time will tell for that. Only time will tell. You on here. I got you on here double. We got two Scullys on here.
Yeah, that would work a little better on the laptop. I had to get the setup straight.
Gotcha. So can you see my screen?
Yeah, it's good now.
Okay, cool. I want to give you a little brief update on the ebook I had somebody designing and just putting together. We take a look at the charts right now. I might get you to do a different cover, just maybe. But I just told them to match it with our logo colors. So this will be the format. This is a preview. Just let me know where he at.
Cool. Well, that's what's up, man. Yeah, I could definitely whip up a book cover for sure.
Yeah, I know you could come up with something way better than that. That was hella generic, but I really just paid for the services to get it all compiled into a true ebook format.
No, that's nice. Yeah, that's nice.
Mm-hmm. I don't think I'm in the trades. How was y'all dinner situation when y'all went? About a fam? Oh yeah, I'm not in that. I think I caught the rest of them sales last week. That was pretty much my only trade I caught that Thursday sale.
No, it was good, bro. Went out there with Dad and Alex. It's a local, the ground patty, local spot.
Oh, nice.
Um, but yeah,
I'm pretty
man, that
sure
was
it was
good.
good.
Mm-hmm.
Well, let's talk about this sweet old news that's coming in. Nothing for Sunday. Monday, July 31st. We have late in the evening or early in the evening, however you want to look at it. We got 6 p.m. Judo Bank Manufacturing, and then 11:30 interest rate for the Australian dollar.
Nice.
Previous was 4.1. The consensus is a raise to 4.35. So they basically doing the same thing US did. 25 points.
So if that's correct with the consistency, what would that do to the market? Drop it?
Uh, it would. It probably wouldn't do much, but if it did do anything, as far as the market's concerned, it's probably gonna raise. It's because raising your interest rate is you making your dollar more attractive. So in hindsight, you should get more people want to fuck with your dollar. But it's a double-edged sword because you raising your interest rate may look good for interested investors, but it also make you look good that you have to raise your interest rates. Like if your dollar is strong, you shouldn't need no interest rate. You know, like we good.
Right.
You don't need no increase in interest, you know, to entice other countries to, you know, mess with my dollar. So you got to look at it both ways. And it's also really going off of how bad the dollar is performing. So this would be just like how Piff was talking about looking at the dollar index. I would look at that to see how that chart is forming, how it's structurally developing based off this news release, and that should give you an indication on where you should trade. That's how I would do that because Australian dollar is, you know, not as nowhere near as powerful as the US dollar. So to just alone say the US has positive news or negative news, that don't mean the opposite for USD. Like it gotta have real bad negative news and positive news for Australian dollar for you see a change in, you know, a large volume push. Tuesday we have S&P, ISM, and JOLTS job openings. Manufacturing PMIs. It's 8:45, 9 o'clock in the morning. New Zealand got the unemployment rate. Might add a little juice in the market. Who knows? Wednesday, ADP employment change, 7:15 in the morning. Wow. I didn't know news releases come out that early. Let's see. Also, Wednesday, Judo Bank Services retail sales and balance of trade for the Australian dollar, 6 o'clock and 8:30. Thursday, initial jobless claims continuing in S&P Global Services. All happening at about 7:30, 8:45, 9 a.m. We got ISM services. And Friday, we got Big Dog non-farm payroll, which a lot of people saying this is not the big dog no more. The CPI and the interest rate and inflation, CPI, all that is really taking the cake right now. But nonetheless, this is not nothing to play with still. NFP, 7:30 in the morning on Friday. We got 4 news releases coming out at the same time, so a bunch of information being thrown in everybody's face. But, you know, any large news on Friday, I would suggest you just let it play out because that is the end of the week. Any candle that has any type of formation has a rest period. You know, it has a growth, a birth, a growth, and a rest period. So with that being said, you got to look at Friday as just like the close of any hour, the close of any session. It's the close of that week. So let the NFP play itself out, and then let that carry into next week, Sunday. Just if you are in a trade from Tuesday and Wednesday, and you let NFP play out and take you in a further profit, that's the best way to assume any type of money from the non-farm payroll. Trying to actually trade it or trying to actually add positions during that volume is not suggested. Like nobody makes money doing that way. It's just too it's too risky. It's way too volatile to to focus in on that. So, and that's pretty much it for the news for next week. I would say, if anything, if not Monday night on an interest rate decision, you could probably catch a good move right there late night Monday going into Tuesday with the morning news. So Monday, Tuesday would be a nice little situation to get into a position, and hopefully NFP will take you further into profit. That's basically how I would like to look at that scenario. What you think about that, bro?
What, of not trading on NFP?
Well, yeah.
Yeah, that's
Oh wow. Yeah.
that's for the advanced trade.
Definitely want to see that.
Yeah, definitely not suggested. Oh. How the weather been out there with your we're running and everything? You still been getting it in?
Yeah, man, it's been crazy hot. So I haven't been going that much, but start going, in the gym and stuff. I've been running in there on the treadmill. But yeah, if I ain't going in like 5, 6 o'clock in the morning, then it ain't worth it.
Yeah. I know it's been 110 over here minimum.
Wow.
Every day. My car been reading triple digits since May. And that's for damn big bag.
Damn.
Every single day, bro.
Dangerous. Like just dangerous heat.
Shit, speaking of dangerous, I know nobody ain't talked about it, but while we were at the Wall Street Trapper event when he came to Dallas, he was going to the parks and stuff, chopping it up with people.
Oh yeah, yeah.
We went to go see him out here in Dallas, and midway through his speech, if you will, they had waters and stuff out there that was giving away, but this guy was standing like in the middle of the crowd, kind of all to himself, and all of a sudden you just hear a body drop. And we look over, everybody look over, and his fam, he done fell down, passed out in the hot water. I mean, in the heat.
Wow.
So they all got him together, poured water on him, gave him his space, try to get him back to sat him down, made sure he was coherent, and they still called the ambulance and stuff just to make sure he was straight because he did fall. So, chances are that nigga could have hit his head because he was just like, yeah, pretty much lifeless type fall. It was crazy. It was scary. But that's how hot it's been. If you're not hydrated, yeah, it's a high chance you could start to get dizzy and thinking you're okay when you're really not okay.
Yeah, hydrate yourself, man. These temperatures been crazy.
Yeah. How'd you do last week in trading? Did you catch your nice little 2 or 3 trades, or was you more active?
Yeah, it was good, man. Like was, you would have waited. That was Wednesday, Thursday. It would have went crazy.
Morning.
Yeah, man. It was good. It was good. Just being patient and waiting for clean traffic and everything to line up and taking those trades. That's all it's been. Like Pitt said, less is more. Like, yeah, that's facts.
Well, that's all. Man, shout out to Wall Street Trapper again, because he got my stock portfolio doing real nice. And I just really started back throwing money in stocks, shit, like February, March on a cool. And that's crazy how those markets have been doing. Like, I've been damn near witnessing like 1% gains a day.
Yeah, now's the perfect time too.
Nah, facts. You already know it's spending money time now. Everybody buying Apple laptops, iPads, phones for school, back to school. All this stuff is going on. You got holidays around the corner. Like, it's about to be lit. Heavy spending. I feel like Ross is gonna do real good. I've been following them. I didn't put no money into it, but I've been following them. They've been doing real good. Sir. So looking at the current state of what we're in right now, what do you think this new month can bring? I'm gonna move this vertical line and I'm gonna put it here to mark the start of the summer. When does summer start initially? Is it June or like May?
I want to say it's May.
Like, I thought it was somewhat like toward the end of May almost.
Yeah, I think so too.
So
Like the end
let's
of
just
May.
call that the beginning of summer, this vertical line, these lows right here. So knowing what you know, what's your prediction, or what do you feel like the monthly or the close of summer going into the beginning of, the new school year, and how that economic shift is going to happen? What do you think? What's your scenario? This is a daily time frame. We got to...
I don't know. I mean, it can do either or, but I would be close to like more sales. I think it could be a bearish engulfing.
I agree. Is that kind of leaning more towards what the previous week did?
Yes.
And the previous week before that?
Yep.
Yeah, I agree. And as far as for bullish continuation, if we do get that, if we do, it would have to be from this point here, because closing below these lows right here would be a shift in the structure of how the market is currently structured. And we currently bullish, even looking back from back here in October last year, we still strongly bullish, especially after we swung this low and then broke back above higher. So overall, I would still say we kind of bullish, but that would speak volumes if we get a close below here and then attack these lows, which ultimately attack this strong support. So that would be a nice little change in how the market is playing out for the year so far.
So you're looking for more on the bullish side of things.
I'm looking at sales, but I'm just trying to see,
because I can see both ways. I can see both ways, man. Like I can see pulling up bullish for the beginning of this month and then closing bearish, I think. But that's what I'm just going with.
Yeah, and if it continues with the structure from June 1st, which is the beginning of the summer, with this bullish structure with lower highs, higher highs, lower high highs, if it continues somewhat with that notion, then yeah, there's a lot of liquidity up here with this double top. We still got slightly more of a gap to fill on the daily. We have even more older highs over here. If I pull back up, actually I thought we did, but no. But just like this double top scenario, we got a double top scenario here, and then another one here, all on the daily time frame. So it's a lot of areas that price could want to reach to bullishly, but I mean, we still had a break out of this area before we even talk about that. But nonetheless, I feel like the bears are more strong in a scenario, but if they are strong enough to break these lows, then that changes everything for the current structure of this bullishness that we had. So that's what I'm saying. I'm trying to see how strong the bears would be to break into the scenario and probably fill in this gap on a 4 hour. Let me see. I don't know. So that's pretty much what I see right now. I still see the bears playing out.
Yes, I do agree. Like that 4 hour gap is clean traffic on the daily. Then you got further movement going into the daily gap. And then I think ultimately that 2020 is getting hit.
Down here?
2020, go down more further. Go down further to that 2020 area you got. Pull it up.
Oh, yeah, the weekly gap.
Yes, I think ultimately, yeah, we go hit that.
Yeah, I agree. I agree. We just got to basically create a new low for the year, which that would mean a stronger, more healthier dollar, more healthier American economy. That's the way we going to break these lows. And that's fundamentally speaking. The fundamentals will have to play out. And the economy would have to grow alongside with a decrease in the interest rates. I feel like that's gonna be that's the scenario we're gonna need for this, for the Australian dollar to fall.
Sure. I agree.
Yeah. But yeah, we're gonna continue to monitor this, man. In Chizat. And we're gonna wrap this Sunday live up, and we'll be back Monday morning, 6:30 a.m. You heard?
Let's get it, guys. Let's continue to do great things, man. So we'll be back at it. We'll be on it. I'll
And
tap
hopefully
in.
that ebook will be done tomorrow, so we can embed that into the website and get that out. But yeah, we're looking forward to that.
For sure, for sure.
All right, brother. Peace.
Peace out.
Deuce.